It is time now for our weekly market monitor, who has names of companies he says will depend more on the ebb and flow of their particular industries over the next year and less on the ups and downs of trade news. Joining us is Chris Cordaro. He's the Chief Investment Officer at Regent Atlantic. Welcome back, Chris. Good to see you again.
Good to see you.
This is a narrative that is somewhat refreshing because it seems as though we're basically chained to the trade war and the narrative that we've heard from it. But you decided to smooth out the ups and downs a little bit.
Yeah, I wanted to look for some stocks and put stocks in the portfolio that aren't so dependent on the trade war and also will do well in sort of a low growth economy. And that's what I think we're likely going to get over the next year or so, where the economy is just sort of skimming along. I don't think it's less likely that we hit a recession, but we're not going to have really strong growth.
All right. Your first choice is Royal Dutch Shell.
And Royal Dutch because it pays a really handsome dividend. So it's paying better than a 6% dividend. It's one of the lowest cost oil producers. So it's a really great bargain and a good income vehicle to add to portfolios.
Then you chose a utility, another classic company that would seem to be insulated from the trade wars. Exelon, pretty good dividend. Why'd you pick this one necessarily?
So Exelon has a really low cost of production, but more importantly, is one of the cleanest energy producers out there. And so that, I think, is translates into a lot of appeal for its stock. And also, I think it has its best position for the future.
You picked a retailer next, and it's key at this time of year, holiday season. And they had a very good earnings report the other day as well. Why else do you like Target?
So I like Target because, one, I think that retailers will do better this holiday season. I think we've finally gotten to the point where we've all experienced that, hey, your gift just didn't make it in time, Sue, and I'm really sorry about it, but, it didn't get delivered. And so there's some tangible ability there, and I think Target's in a really good place to really benefit from that in this holiday season.
But so many individual investors these days are in index funds. They're in exchange-traded funds. So their exposure to the market is more broad than what you're suggesting here. And they are subject to the vagaries of the trade wars going on right now. So what's your outlook for the market here?
Well, so I think we've had a really strong year. I think the economy is definitely slowing. So we're not going to see anything like we saw this year. And what we see going forward is that I think a pivot more into stocks that are more of a value focus, more smaller cap. Indexing and market capitalization has led for a long time. And I think we're possibly at an inflection point where we see that change going forward.
And interest rates very quickly, you expect them to stay steady now?
Yeah, I think they're going to stay steady. The Fed's going to wait to see what happens. But I don't see any big movements upward or downward.
Chris, thanks so much.
Thanks, Chris.
Chris Cordaro joining us today with Regent Atlantic.